Bearish winds blow as Nifty retreats towards 22,000 mark. Gifty Nifty on the back foot and indicating Nifty shall move back towards 22,000 mark. The bearish action is on backdrop of weak lead from Wall Street following the mixed macroeconomic data releases. 1. US producer prices rise more than expected. 2. Retail sales in the US were up 0.6% month-over-month in February 2024. Amidst this backdrop, the US dollar gathered strength, now at 103.35 levels. The benchmark 10-year US Treasury bond yield was up at 4.25%. Meanwhile, India's WPI inflation prices have climbed by 0.20% year-on-year in February 2024, and that's below market estimates of 0.25%. Bottom line, focus now turns to Fed's FOMC meeting on March 19-20th. Until then, volatility is likely to be the hallmark. Global cues are negative. In yesterday's trade, FIIs net sold to the tune of Rs 1356 crores. DIIs however bought to the tune of Rs 140 crores. Market breadth for the day is likely to be negative. Sentiment is likely to be risky. Nifty's technicals are suggesting weakening bullish momentum. F&O data suggests the likely trading range for Nifty is likely to be between 21,000 to 22,500 zone. India VIX has cooled towards 13.62 levels. Nifty PCR, 21st March, is at 0.88. Nifty PCR, 28th March, is at 1.21. Nifty outlook, there are now more than 2 bears for every bull. Caution advised. Nifty, CMP to 2147. Support, 22,000 to 21,900. Resistance, 22,200 to 22,350. Range, 21,900 to 22,350. Bias, sideways to bullish. Bank Nifty, CMP 46790. Support, 46,600 to 46,300. Resistance, 47,000 to 47,300. Range, 46,300 to 47,300. Bias, sideways to bullish. The trading theme revolves around stress test disclosures for small and mid-caps funds to be wired this Friday, 15th March, which will gauge the fund's resilience to sudden redemption pressures. SEBI chairperson Madhvi Puri Bach had recently stated that in an adverse environment, the biggest risk for mutual funds is how do they deal with redemption pressure when the underlying market is not liquid. Fitch Ratings has raised its forecast for India's economic growth to 7% for the next fiscal year starting 1st April on the back of strong domestic demand and sustained level of business and consumer confidence. Rubber prices have hit a 20-month high. Negative for tire stocks in general. Prices of iron ore have dropped to $107.50 per ton, the lowest in nearly 7 months due to subdued demand in China, the leading consumer. Negative for stocks like NMDC. Steel futures too dipped towards 3,500 renminbi per ton, hitting their lowest point since 1st June, amidst concerns over weakening demand in China. Negative for stocks like Tata Steel, JSW Steel. Copper prices are on rise as they have surged to over $4 per pound, reaching the highest in more than 7 months after top Chinese copper smelters agreed to reduce production at unprofitable facilities due to raw material shortages. Positive for Hindustan Copper. WTI crude futures have risen above $81 per barrel, the highest in more than 4 months as a surprise decline in US crude inventories.